Can you believe it? The unthinkable just happened. Gold has officially smashed through the $4,000 per ounce barrier. This isn't just another market milestone. It's a seismic shockwave ripping through the global financial system, signaling profound instability. If you're an investor right now, the only question that truly matters is, what on earth does this mean for your portfolio? We're about to break down the three powerful forces that drove this historic surge and, more importantly, the three critical steps you need to take right now to protect your capital in the fourth quarter. This $4,000 price tag isn't a whisper. It's a deafening scream from the market. The first driver? Hyperinflation and a terrifying loss of faith in government debt. The market is shouting that it no longer trusts fiat currencies. Investors are panicking, fleeing government bonds and the dollar, and desperately seeking refuge in the ultimate timeless store of value. This isn't just a rally, it's a full-blown exodus. The second driver is the unprecedented demand from central banks. All around the world, particularly in emerging markets, central banks are aggressively diversifying their reserves. They are actively de-dollarizing, viewing gold as the only true, neutral asset amidst escalating geopolitical conflicts and a fracturing global order. They're not just buying, they're hoarding. And that's sending a powerful signal to every single investor on the planet. And that brings us to driver number 3, the collapse of confidence. This is the big one, the psychological tipping point. A $4,000 gold price is a damning verdict on global stability. It means that faith in conventional assets, the stocks, the tech darlings, and the currencies we've relied on for decades, has been utterly shattered. This mass psychological shift is driving a tidal wave of capital into pure risk-off assets. The fear factor is no longer just a part of the market, it has become the dominant market metric. So how does this instantly reshape your portfolio for Q4? Let's talk winners and losers. The winners are obvious: gold mining stocks. With gold at $4,000, their profit margins have just exploded. These companies are now high beta plays on the gold price itself, offering leveraged returns. Similarly, physical gold ETFs, which were once considered satellite holdings, now become essential core positions for any serious portfolio looking to weather this storm. Now for the losers. The list is long, but it starts with anything reliant on cheap credit or dreams of stable growth. Think of those speculative tech stocks that were priced for perfection, high-yield junk bonds that are now facing a terrifying surge in default risk, and emerging markets that are highly dependent on a stable US dollar. For all of them, the cost of capital just skyrocketed, and their business models are under extreme pressure. So, what should you do right now? First, action step number 1 is to immediately rebalance and de-risk. If this incredible rally has pushed gold to over 20% of your portfolio, it's time to trim. This move is parabolic and overextended, and a sharp correction is almost inevitable. Take some of those fantastic profits off the table and use them to diversify into other protective hedges. That leads to action step 2. Look to hard asset relatives. While gold has stolen the spotlight, silver and platinum are still significantly undervalued in comparison. Their historical price ratios to gold suggest they have a lot of catching up to do. You can use these precious metals as secondary inflation hedges, offering a different risk-reward profile while still protecting you from currency debasement. Finally, action step number 3. Increase your liquidity. Cash is king. In an environment of extreme volatility like this one, having dry powder is not just a defensive move, it's an offensive one. You should aim to hold 10% to 15% of your portfolio in cash. This will allow you to capitalize on the massive fire sale opportunities that will inevitably follow this initial shockwave. Remember, fortunes are made in times of chaos by those who are prepared. $4,000 gold is a monumental event, confirming what many have feared for years. We are in an era of extreme global risk, but this is not a time for panic. It is a time for deliberate, clear-headed, and strategic action. Your goal now is to protect your purchasing power and prioritize tangible, real assets over paper promises and speculation. What do you think is the biggest force driving gold to $4,000? Let me know your thoughts down in the comments. If you found this breakdown helpful, please hit that like button and be sure to subscribe for our ongoing Q4 Survival Guide series. Thanks for watching.